Hello and good afternoon to all and everyone present out here. My name is Aditya and I will be conducting this session on behalf of Dolphin Markets. The topic for today's session will be the magic of compound interest in the stock market. Well, you will be learning a lot of things about the stock markets and its compounding, right? So, we will analyze how this compounding works, what what are the factors behind the compounding. We will go through some examples and let you make you understand how the magic of number works, right? So, talking about my expertise and experience, I have been here in the trading market from last 7 years and have been consistently providing the returns of 60 to 70% in the market. So be rest assured, whatever the advice and recommendation strategy we are providing is backed by a good research. Now, talking about our analysis, we follow Aditya follow basically fundamental analysis approach, and on the basis of that only we provide you with some knowledge about the fundamentals and the market related knowledge, right? So the we will talk about the compound interest magic today. But before that, we just have a look on our stock tracking holding and what it has performed today. And we will come back to the presentation and let you go through. So for today, we have this holding currently, right? And if we go to the performances for today in the trading, you see it where we have our holding, except the DDEV plastic industry, every stocks is negative currently and has fallen a bit, right? We know there are some uncertainties in the market and there are a lot of volatility in the market due to the Fed rate decision is yet to come, and due to that effect is shown in the overall market also. And whatever our holding we have is making some negativity, right? So this is our holding as of now. DD plastic is on have closed 0.31%. IP rings to Punawala. So the most negative was Punawala today, minus 3.21%. Also in Punawala, we have three entries. Kriti Industries, we have entered recently at the level of 170 and 175. So just remember, whenever the stock reaches at the level of 170 and 175, you are making a position so that whenever the stock gains, you will be able to make profit from that, right? I hope everyone is getting my point on all of the recommendation we provide and what are the strategies we follow. But today we will go through the compounding, right? How the compounding works and how it can make you and how it can create you significant wealth and make you significantly wealthy if you give time to the market, right? We have been already talking about the time, that remember the market is not all about timing, it's all about time in the market. We will finally talk about that, why time is important in the market, right? So you have been seeing we have been consistently providing you with the profitability. Last 3 months we are able to generate you with the profits of 232% of profits just in 37 trades, and it just took 3 months to reach the profitability of 232%. So we are generating a constant profit for you where you are making constant gains in the market, correct? I hope everyone is happy with this game, right? Please let me know in the comment section that everyone is happy in the game, right? And now we will go about talking the magic of compound interest in the stock market. We will know how small investment, how small profits grow your wealth over time and create a tremendous wealth for you. Have you remember Warren Buffett? Does anyone remember Warren Buffett from this session? I guess most of you have heard about Warren Buffett. Warren Buffett wealth, most of the Warren Buffett wealth has been created after the age of 50. So 99% of Warren Buffett wealth has been created after the age of 50. Why? Because of the magic of compounding. Warren Buffett till date have generated a returns of 19 to 20% as of now and have created tremendous wealth for himself. Correct. So we will just go through what is the definition of compound interest. What do we mean by compound interest? Compound interest is the interest on the principal amount and accumulated interest over time. We will understand this definition. I guess most of you would not be getting this point. Correct? Am I correct or not? I hope most of the people don't get this point, and that's why they lack. That's why they lack investment knowledge. That's why most of the people are out of the market. If they start understanding the magic of compound interest and how it works, I guess each and everyone will be interested in investing in stock market and generating returns for you. So why compound interest in stock market matters? It generates exponential growth when returns are reinvested, crucial for long-term investors, right? When you look, it generates exponential growth when returns are reinvested because you are reinvesting your money again and again and you are getting compounded returns over it, right? And it is crucial for long-term investors to generate lot of wealth. We have a famous quote by Albert Einstein. What Albert Einstein mentioned on compounding? Compounded interest is the eighth wonder of the world. So, a very big scientist, Albert Einstein, have mentioned that compound interest is the eighth wonder of the world. So, what do you mean by eighth wonder of the world? We have seven wonders: physical, present, and compounding, which is not even visible. Albert Einstein have mentioned about that. We every one of us know about the Albert Einstein. He was the one of the most famous scientists in the world till date, and he have mentioned about the compound interest, right? Taking about the eighth wonder of the world. So we have a table of contents. What we will understand here: understanding compound interest, how compound interest works in stock market, the power of time and patience. The most important thing: the power of time and patience. Examples of compound interest in action, benefits of compound interest, challenges and consideration, tips to maximize compound interest, key takeaways and conclusion. And then we will come to a conclusion. But we have to understand each and every working of compound interest, examples of it, benefit of compound interest, challenges and consideration, and tips to maximize your compound interest. Correct? So let's have a journey on that. So understanding compound interest. What do you understand by compound interest? Any of you who understand compound interest? So we'll start with an example. We have a formula for compound interest. What is the formula? Formula is amount. Okay, A is the final amount. P, what does P indicate? We have a formula: A is equal to P in bracket 1 plus R by N into N T. So what do you mean by this? So A means the final amount. A is depicted the final amount which we have currently. P is the principal which you invested in the market, right? R is the annual rate of interest which you are getting in the market, right? So A is the final amount which is cumulative of all the returns which you have generated. What does P indicate? P indicates the principal amount which you have invested in the initially, right? And R is the rate of interest which you are generating over the period of time. So R is the rate of interest, and N is the number of times compounded per year. So how many of times the compounding is taking place? Is it in quarterly basis? If it is in quarterly basis, the compounding will take place 4 times a year. If it is on yearly basis, the compounding will take place 1 times a year, right? And T in time in years. So T represents time in years, correct? So how many years you have been invested? Are you invested in a stock or a market to get the total final amount? So all this depicts a final amount where you are investing your principal, getting the annual rate of interest, the number of times it has been compounded yearly, and T in times of year. So all this of combination and formula give you the final amount where you have currently as of now. We will understand each and everything in brief. What do you mean by simple and compound interest? Right? Simple interest is only on principal. We get interest only on principal, not on the principal plus principal. What does compound interest means? Compound interest means principal plus earned interest, right? So you are basically getting interest on interest in compounding, but in simple interest you are just getting interest on the principal amount. We have an example for that. 10,000 at 10% for 3 years. Suppose you have invested your 10,000 rupees. You have invested your 10,000 rupees at 10% for 3 years. So the simple interest, because you are getting interest on just as a principal amount. So at the simple interest, you will be generating only 13,000 rupees of capital after 3 years. Okay. So this will be your final amount after 3 years you complete. But for the compound interest, if you look, but for the compound interest, if you are generating interest on interest, suppose at the end of first year you are having 11,000. If you are getting 10% interest on 10,000, so you will be acting at 11,000, and again 10% on that, then you will be at a position of 12,100 rupees, and then again you will be getting 10% of them. That will make 13,310 rupees. So that is the magic of compounding, and it keeps on growing on a significantly on year basis, and your capital grows significantly. Right, we will understand each and everything. Don't be confused, we will be making you understand each and everything in detail in coming session. So how ci works in stock market, what are the steps of compounding in stocks, right? We have to, so how compounding goes, we have to understand how compound interest works in stock market, right? So for that we have some steps and example too. So the first step we have in compounding, first of all you have to invest your money, the principal amount, right? Then only the compounding will take place. If you're not investing any money, the compounding will be on zero, correct? And if you are investing your money on some capital, suppose you have invested 10 rupees, the compounding will be on 10 rupees. If you have invested 10 lakh, the compounding will be occurring on 10 lakh. So it also depends on the number of like amount of money you are being invested, and you are generating returns for that, right? So steps of compounding in stocks, you have to invest first of all principal, right? Stock grows in value, so you will get the capital appreciation of that. Reinvest profits and dividend. So whenever you get the profits in the form of dividend, right, from the stocks, you are reinvesting that and getting interest. You are getting the benefit of compounding on returns on reinvested earnings. So whatever reinvested money you are investing in currently, you are getting returns from that, correct? So we have an example. What is the example? Invest rupees 10,000 at 12% annual return for 10 years. Suppose you have invested 10,000 rupees at 12% annual return for 10 years. What will be the year one value? Year one value will be, obviously you will get the same amount as principal, simple interest and compound interest will be same in year one, but it give you effect from the year two. So year two you will be having 12,554 rupees. Just look at the example. Year one you are having 11,200. Year two you are having the money 12,544, and on year 10 you are having 31,058. So just by investing 10,000 of rupees at the rate of 12% annually return for 10 years, you are getting 31,000 rupees approximately, and you have invested just 10,000. Suppose if you have invested on we will take an example. If you have invested on a simple interest at the 10% or 12% annual, will you be able to generate this type of returns? The answer will be no, right? Because why this because is coming? Because there is a simple interest, and here we are compounding. We are getting interest on interest. On a simple interest, you will be only getting the interest based on the principal. If you have invested 10,000 rupees on simple interest, you could have only get at 12%, the total capital will be 2,20,000, and on the compounding basis at the rate of 12% annual returns for 10 years, you are getting 31,058 rupees. So this is the magic of compounding we are seeing, and it differs a lot. Once it goes for 20 years, 100 years, the magic will be more, right? We also have an example for that. We will make you understand each and everything on that. So what we have, the power of time and patience. The earlier you start, the more you earn. What are the examples? Suppose there are two investors. One investor have started at the age of 25 and invest only 5,000 rupees at 12% for 30 years. So investor B starts at the age of 35, invest 5,000 annually at the rate of 12% for 20 years. So who will be more profitable? Who will be gaining more, right? So we have to see the difference of age where they started. So result A, we have a result. If investor A is 150, investor A has invested 150 and got 14 lakhs 93,000 rupees at 12% CAGR. So if investor start investing at the age of 25 and invest 5,000 annually, he have just invested 50,000 more than investor B and was able to generate the surplus, the capital of 14 lakh 93,000 rupees at 12%. We are assuming 12% for investor A also and 12% for investor B also. They have started investing at the rate of 12%. We have a comment. Raptor is back in our channel and watching our videos. Hi Raptor. I hope you are getting all of my points and making sense to you. And we are learning about the power of compound interest in the stock market and how the compound interest works in the stock market, and you will be able to generate significant wealth from the stock market through compounding. So we are looking at an example. The earlier you start, the more you earn. We have an example for two investors. We have talked about investor A and investor B, where the age of the investor is only differing. Investor A is starting investing at the age of 25 and investor B is starting at the age of 35, and they invest equal amount of money. So the amount will not vary because we have to give some examples on based on that. So the amount is also equal, the rate of interest is also equal, but the years are differing. Just the years are differing. So just look at this, the 10-year difference, what it makes. So investor A is investing 1,50,000 rupees and it is generating 14 lakh 93,000 at 12% CAGR, compounded annual growth rate. So at 12% CAGR, investor is able to make 14 lakh rupees 93,000. And investor B, whereas he have invested 10 years late from investor A, so it is only about to invest 1 lakh rupees currently and have generated 5 lakh 50,000 rupees at 12% CAGR. So look at the differences. The investor B, what are the problems investor B have faced? First of all, investor B have started investing 10 years later than investor A, right? And investor B is not able to invest much of amount than investor A. So the time difference is taking place, right? So this is starting 10 year early is making a huge difference. The difference between the invested amount is not much as compared to investor A and investor B, but the returns which they have generated over the years, over the 20 years and 30 years, is making them huge. You can see just the 1/3 of the money is being kept with investor B and 14 lakh rupees is with investor A. So investor A is gaining 13 lakh 50,000 rupees from the invested amount, and investor B is only gaining 4 lakh 50,000 rupees, right? So just look at the differences. How the earlier you start, the earlier you will start making gain, and the compounding effect will take place, and you will be making huge gain out of it. So we have a real life examples of compound interest. We'll just go through it. So what are the real life examples? Warren Buffett started investing at the age of 11. So we all know the famous famous investor Warren Buffett, which have started at the age of investing, and most of the wealth Warren Buffett had. I guess Warren Buffett is one of the richest person in the world and have a wealth of around more than 100 billions currently. And he also manages Berkshire Hathaway, one of the most prominent investment firm in USA, right? So the 99% of the wealth from Warren Buffett came after the 50s, after he reached the age of 50s, thanks to compounding. Why the Warren Buffett wants to thanks to compounding? Because 99% of the wealth has come from the compounding. I will explain you with example in more detail. Warren Buffett wealth. I will go through the web pages also and make you an example. So we'll just go through the web pages and know about Warren Buffett. Warren Buffett, age versus wealth. So just look at this chart, net worth of Warren Buffett. We know everyone knows about Warren Buffett in the investment journey. For those who don't know, the Warren Buffett is one of the most prominent investors, and whatever philosophies he has given is followed by almost all of the investors in the world, and they are able to follow just Warren Buffett strategy and are making money very easily. He also explains the concept of compound interest in a very well manner, and he has shown how compound interest can be a great help for the investors who are starting with a low capital, and how they can earn over times, right? So just look at it. Warren Buffett at the age of 14 was having only 5,000 rupees of capital. 5,000 rupees, 5,000 rupees of, not rupees, in dollars, $5,000 of capital at the age of 14. And it was not much till the age of 50. You can just look at it. The Warren Buffett wealth was not much at the age of 50. It was around 67 to 376 million, not even in billions. Not even in billions, right? Not even in billions. It reached 1 billion at the age of, between the age of 53 to 56. So just remember, Warren Buffett became billionaire at the age of 53 to 56, on around 55, at the age of 55, if you can guess. So Warren Buffett became billionaire at the age of 55, and now the Warren Buffett is sitting at the wealth of 109. Why? Because the magic of compounding is taking place. Just look through this year, the stock prices of the, Warren Buffett, sorry, the stock prices of the company which Warren Buffett was holding has started growing and showing its potential through compounding, right? So whenever you are investing and you are investing to gain return, and for the people who are investing to generate wealth for them, the compound interest plays a very important role. So just look at the Warren Buffett chart. So by the age of 53 and 56, he was having a wealth of 620 to 1.4 billion, and then it started increasing till 59 to till the 60s. Warren Buffett was having only 3.8 billion, and started increasing exponentially after that. The compound interest was shown, the compound interest magic was shown, and it is been seen here that Warren Buffett is currently sitting at the wealth of 109 billion at the age of 92. So most of the wealth which Warren Buffett have generated till date is through the compound interest. It is generated from the stock market, which is showing the magic of compound interest and the wealth of Warren Buffett, right? So this is the wealth of Warren Buffett. We have seen Buffett started young. So whoever wants to take the benefit of years, whoever wants to take the most benefit of compound interest, just start early as you can. So Warren Buffett reached millionaire status by 30 and achieved financial success through ambitious goal setting and dedicated effort. And Warren Buffett was billionaire at 55. As we are talking, we are making some prediction on that, and it was around 55 only. So it is written at 55, Warren Buffett became billionaire, and has been one of the almost 40 years through ups and downs and market. So Warren Buffett is able to maintain its billionaire status from last 40 years, right? A resilient strategy. Buffett has also recovered from a major financial setback in 1970s, showing the importance of dealing with failure. So Warren Buffett is also able to deliver its goal even in the financial setback have been facing by Warren Buffett. According to Forbes, if you look, it is as of December, Warren Buffett is sitting around the wealth of 150.6 billion, and he is the eighth richest person in the world. So Warren Buffett is currently eighth richest person in the world. At a point of time, for few years, like 3 years back, if you see, when Elon Musk and few of the investors which are currently at the top were not there, Warren Buffett was one of the richest person in the world. by for many years. Warren Buffett and Bill Gates were having competition in that, and Warren Buffett was able to maintain the richest person status in the world for many years. And what Warren Buffett has made this well, how Warren Buffett has made this well, it is all through the effect of compounding. The wealth was possible to create. So if you want to become the next Warren Buffett, if you want to be like a Warren Buffett and follow this strategy, right, you have to think like Warren Buffett. You have to first think like Warren Buffett, then only you can become the next Warren Buffett, right? So you can also see he was not even a billionaire by the age of 50, and 99% of Warren Buffett net worth was earned after the 50th birthday. We can clearly see Warren Buffett was not even a billionaire at the age of 50. He became billionaire at the age of 55, and we are seeing the wealth of 150 billion currently. So it was not even 99. I will talk about not even 99. At the age of 50, he was at 99.5% of wealth of Warren Buffett has been created after the age of 50. So just think about the magic of compounding. You can just have a focus, just concentrate on your mind, and just start thinking about the magic of compounding which is taking place in terms of Warren Buffett wealth, and how it can help you to grow your wealth significantly. Just think about that. Just think about the logic. We will go back and explain you in more deep, like we in Indian markets, right? In terms of Indian market, how we can take the benefit of compounding, why SIP is important if you are not a very frequent trader in the market, right? How SIP can create significant wealth for you. We will also show you the example of that through graph, and how the percentage of returns gets you the significant difference in terms over the years, right? We will also show that. So example of mutual fund SIP, we have, suppose you invest 5,000 rupees per month at 12% CAGR for 20 years. So let me know what will be the future value of it after the 20 years. Any guesses, guys? So most of the answers which I see is wrong. We at the at 12% CAGR, if we invest for 20 years only 5,000 rupees, we will be only investing, just look, we will be only investing 49 lakh, we will be only investing 12 lakh rupees, and the future value of that SIP, right? The mutual fund SIP will be 49 lakh 50,000, on and around 50 lakhs of wealth you will be creating if you invest 5,000 rupees per month at the CAGR of 20 years. So just look at the magic. You are able to gain wealth from it. You are investing just 5,000 rupees per month. It is not significant to invest 5,000 rupees per month. You are just wasting that money, right? Currently you are just wasting the 5,000, 10,000 in many unnecessary work. Start investing that money in the mutual fund. So if you invest only 5,000 rupees at the rate of 12% CAGR for 20 years, I'm talking about 20 years exact, and the compounded annual growth rate we are expecting to 12%. We can also earn above that, right? We will just talk about that. If the rate of compounded annual growth rate goes from 12 to 25, what will be its benefit? So totally we have invested 12 lakh, and the future value is 59 lakhs 50,000. So we are able to generate a wealth of 49 lakh 50,000. So what is the difference we are getting? We are getting a difference of 37 lakhs 50,000 rupees. So this is the amount of profit we are getting, right? Total profits just by investing 12 lakh rupees. So I will just explain you through graph how the, so it is an example of mutual fund SIP, the future value and total investor. So this is represented by total invested value which we are investing throughout. It is constant. It is constant throughout the years, throughout the 20 years. So you are only investing one like 12 lakh rupees, right? 12 lakh rupees of investments are there. You are investing for two 240 months. So in 20 years, if you calculate the number of months, you are investing just 20 for 240 months, and you are investing just 12 lakh rupees, right? So What do you mean by 12 lakh rupees? How will you gain from it? So this, look at the compound, the future value. The future value keeps on increasing, and the difference between this keeps on increasing, and we can see the difference is getting huge and huge in coming years. So this is the effect of compounding. We will be able to see the difference is getting huge, and as we go over the years, the difference will keep on increasing. Your invested value will remain constant. Just look at it at the starting of the, years of investment, your differences was not much, right? At the, when you have invested for 50 months or around 4.2 years, the value which you invested was like a 50 into 50, like 2.5 lakh rupees, and the amount, the value which you had in your, like in terms of rupees, you were having a value of 20 lakh rupees, and as it grows keeps on increasing, you are just invested 12 lakh rupees, and the value, the future value goes up to on around 50 lakh rupees, 49 lakh 50,000. So this is the magic of compounding you are seeing, and I will explain you with a more example. If the interest rate is changed, suppose we are earning 25% CAGR versus the 12% CAGR, right? If instead of earning 12%, we are able to achieve 25% CAGR over the years, so compounded annual growth rate. So what will be the value? Any guesses, guys? What will be the value for it? I think none of you can guess, right? None of you can guess, I guess. So even if you are guessing, you will be wrong, because it takes the magic of compounding is working here. So just look at it. For the same scenario, we were having at 12%, we are able to generate you with the profitability of 37 lakh rupees by investing just 12 lakh rupees, right? At the rate of 12%, and at the rate of 25% CAGR, compounded annual growth rate, your value will be 3.5 crore, approximately 3.5 crore. So look at the significant returns it is able to generate through compounding. Can you imagine just 3.5 crore just by investing 12 lakh rupees over the year of 20 years? You are able to generate 3.5 crore rupees, 3.5 crore rupees for yourself. Aren't aren't is interesting? Isn't it interesting as of now? Right? It is getting interesting for you, right? The 25%, if you are able to generate the returns at the rate of 25%, you are creating significant wealth as compared to the 12%. At 12%, you will be only making 50 lakh rupees, on around 50 lakh rupees. And if we just add that percentage, 13% in it, if it goes from 12 to 25, we will be seeing the value growth from 50 lakhs to 3.5 crore. So just look at the potential, how compounding can work. And if we just increase our percentage of compounding annual growth rate through our research, through whatever means you are going in, you are investing in the market, you will be creating significant wealth for yourself, right? So we have our new viewer, Sophia. Hi, Sophia. I hope you are good. You are doing great. If you have missed out something, uh, just remember that we are going through the magic of compounding and how it works. Right? If you have not been here, I will just have a quick review of this graph. Right? We were talking about the future value and the total invested value. Right? The future value at 12% CAGR, and the future value, what will be the future value at 25% CAGR over the years 20 years, right? So we are investing for 240 months as of now, and the total invested is only 12 lakh rupees. So we are having a return of 25% and 12%. We were talking about the return. So you are just investing 12 lakh rupees over the 20 years by investing just 5,000 rupees, right, on monthly basis. So if you calculate, you are just investing 12 lakh rupees, and over the year, if you have generated returns 12%, you will be getting 49 lakh 50,000, right, approximately 50,000 rupee 50,000 sorry 50 lakh rupees. And if you have generated that wealth over 25% compounded annual growth rate, you will be getting 3.5 crores of rupees, approximately 3.5 crore rupees at 25% CAGR. Just by increasing some percentage of CAGR, you are able to see the magic of compounding. At one place you are getting 50 lakh rupees, and at one place you are getting the returns which is approximately equals to 1 to 7 times. At one place you are getting just 50 lakh, and another place you are getting 3.5 crore, which is 7 times more than the 12% CAGR. So this is the benefit of compounding, right? We will talk about the benefits. So what are the benefit of compound interest? We are seeing exponential growth. Money multiplies faster as time passes, right? So we have seen, as the time keeps passing on, the exponential growth take place. Multi multiplies over multiplies, right? Multiplication take place, and it multiplies interest over interest, interest over interest, and your wealth starts to grow significantly. Correct? We have seen with an example. So what we have? We have minimal effect. CI work automatically with reinvestment. So we don't have to worry about our investment. We just invest our money. Compound interest will work automatically if we reinvest all of our money. Right? If we reinvest the returns, the dividends which we are getting from the stock or company, and if we are keep reinvesting that. So the power of dividends, reinvesting dividends, buy more stocks. We have talked about that. If you are getting any dividends from any company, if you are getting any profits from the company, the distribution of wealth is happening from the company side. So you can just reinvest that money and wait for the magic of compounding. So long-term wealth creator, it is ideal for retirement, education, and financial retirement. So if you want to attain the financial independence, compound interest is the only thing which can help you go through. With little amount of money, you can just crack the code of life and be a financial independent person. Just by investing little, just by, you can see, we have seen in an example, just by investing 5,000 per month, which is not much, I guess, for most of the viewers we are viewing, right? You will be attaining financial independence. Suppose you are able to get to the wealth of 3.5 crore, even not 3.5 crore. Suppose adjusting all the expenses, all everything, you are able to generate a wealth of 3 crore rupees, right? So if we calculate, even if you keep in the FD, right, even if you keep the FD, we don't suggest to keep your money in the FD, but for an example, if you are keeping that money in the FD, the returns from 3 crore will be around 15, approximately 15 to 20 lakh rupees easily on any FD you do. Like 5 to 7% return is a standard, so we are expecting 15 to 20 lakh rupees coming out of it. So on an average, you will get a monthly benefit of 1 to 1.5 lakh rupees, right? 1 to 1.5 lakh rupees, and you are not even losing that 3 crore rupees. You are not even losing that 3 crore rupees. You are able to gaining all of the, you are just sitting and eating the interest, and the money will be kept for your future purpose. What are the future purpose? It can be kept for your children's, right? It can make your wealth pass to your children for a better cause. Your children will be also better financially independence, and they don't have to depend on anyone. They don't have to depend on anyone to be financially independent. They will be born financially independent, right? So if you are thinking about your children, if you are thinking about your family, the compound interest can do magic for you. So just start thinking about compound interest and start investing as early as possible, because the earlier you start, the earlier you will be able to gain the benefit of compound interest. So long-term wealth creation, ideal for retirement, education, and financial independence. So we have talked about that. We can plan for retirement. If you want the great surplus to come in, we can plan for retirement, we can plan for education and financial independence too. If you want to gain financial independence through compounding, you can just invest in the stock market and let the compounding happen, let the money make money for you, and that money will be making money for you, and that will be continuing till you get richer and richer and richer, because money works in the market and make money for you. So beats inflation. Returns on stock often outpace inflation. So whatever inflation we are seeing, right? We know the concept of inflation. It decreases your purchasing power over the years. How? Talking about inflation. Suppose you are having $100 today. Will it be able to buy same amount of goods tomorrow also? Like the not tomorrow exactly, the after some years, like 5 years or 10 years, will it you will be able to buy that goods in $100 after 5-10 years? The answer will be no, because the the purchasing power of yours keeps on decreasing, right? The purchasing power of yours keeps on decreasing, and you will lose.
你过来看一下啊。如果说因为我刚才试了一下我电脑嘛，我如果点这个幻灯片的话，然后是只有一页嘛，是吧？全屏的。它这个为什么是这样子？
这代表着 Slide 11第11页，这咋了？这是
按说它应该是只是一个全屏的东西嘛，对吧？
Once click here, once.
这是什么？不是这个，不是这个，就是
现在在直播吗？
对，在直播，因为马上快结束了嘛。
不是，我的意思是从客户那看，是全屏的就行了。
不是全屏，就是刚才那个样子，就这个样子，就这个样子。所以不是太懂呀，这什么意思？按说不应该上面有显示那个东西啊。
这是干什么？
是不是也可以把它放？
啥呀？
版本不一样吗？
那我明白。你要问问哈士。
因为我看一下啊，不行，这个没办法去。
直播间看到是啥样？
直播间看就是我刚才跟你说那样子，因为我用电脑上看了，就是这样子，就这样子，版面。
这个屏幕这块这是啥呀？
这个是让你呀，关键是它显示这个呀。
不是，那这个屏幕分出来的这是啥意思？
我不知道呀，你问他。
就是让客户看到这个屏幕不就行了？
对呀，客户就是要看这个屏幕呀。可是我们目前显示的是这个屏幕。
Is there any playing setting? Maybe I don't know.
Even I'm not understanding why it's happening. Like this has been shown in the screen, right? Even we try to figure out, like this is not happening, I guess.
我还是叫过来问问。
行，叫过来我一起看一下怎么搞。
Just go and see. It's not coming.
可以了，他刚刚设置了一下，然后就成这样子了。
इधर आ रहा है पर it's not coming here. the screen.
可以
When
可以
it's full screen, yeah.
可以可以，这样就
it's
可以。
黑了，
黑了什么？
屏幕黑了。
Windows capture.
哪黑
This
了？
is coming. Oh, I guess इसको यहाँ पे कैसे लाएंगे?
现在还能看见是吧？还在直播中。
你进直播看一下，看它目前显示什么样的。
तो बेसिकली ये है, शायद ये हम लोग का है और ये आना चाहिए.
显示这边的。为什么显示这样子？
Live streaming is showing
This screen, right?
yeah this screen. It should be
This one.
With
Because we have selected.
Because that is where WPS is connected to. So when you open the PowerPoint in full screen, it becomes 7. Because the Windows capture is WPS.
现在呢？
क्या किया था?
यहाँ पे window capture में
这
गया.
个那个
Now available.
Okay, so it's open
桌面，然后
separately.
视上，然后
So
那
we
个
went to Windows capture and we put the different setting for Windows capture.
Now we can do, I guess.
I think I got it. This is
Separate.
Microsoft.
Yeah.
It's Office, Microsoft Office.
WPS office.
WPS?
Yeah.
All WPS?
Yeah, all WPS.
But it's a separate window.
But it's a separate window. We have to, what we have to do,
I got it.
we have to just capture this screen here if we are doing the presentation.
Mhm.
Okay, like we are doing with the current slide.
看
Okay.
一下，
So the
And
setting
it
Yeah.
works fine. It works
So
fine.
it is coming
Yeah, it's
here.
separate. Don't make it separate.
Okay.
可以了，可以了，是吧？OK OK。
Should I complete it?
他懂了吗？对的，他会懂。
懂？你知道为啥吗？
对吧？
你懂了吗？
我看他把那个桌面然后换成然后那个片的时候，
不，是 WPS。
出去的时候。
Should I complete the session?
Yeah.
So we were talking about the tips to maximize compound interest, right? We were talking about the benefits. We have talked about the inflation. Now we will go through the challenges and consequences we can face in compounding. What are the challenges and considerations? So market volatility is a challenge. Stock price can fluctuate, right? Stock price can fluctuate. Patience is needed. So the market volatility, if the market volatility is taking place, you have to wait for it. The market will be volatile. Stock price will be keep fluctuating. But you have to keep patience because you are investing for a long term. You are investing for a long term and you want to generate wealth for the long term. And from then only, you will be able to gain the benefit of compound interest, right? Also, the patience is needed. In the compound interest, the most important thing is patience. You are investing for years. You are not investing your money for trading. So the patience is the most important thing. Compounded interest works best over decades, not over months. So we have to wait for the decades to go to wait and see how compounding interest works. As we have seen the wealth of Warren Buffett, 99.5% of wealth of Warren Buffett has been generated after the age of 55. So just look at it. So 99% of wealth is generated after 50 years. So that's the magic of compounding you have in it. Warren Buffett had a wealth of $5,000 at the age of 14 and it kept on compounding and has increased at $150 currently. Regular investment, stopping midway reduces potential, right? So if you want to gain the magic of compounding, if you want to gain from the compounding, you have to regularly invest, regularly make your investment, and you don't have to stop midway to reduce your potential. In what are the inflation risks? Ensures returns are exceeding inflation so that all of your money you have currently is beating the inflation and generating returns for you. What are the tips? What are the tips to maximize the compound interest? Start early, right? Time is your biggest asset. Reinvest dividends, returns, let returns compound, right? You have to start early as possible. Time is your biggest asset in compound interest. If I am correct, right? If I am not correct, tell let me what will be the correct answer. Time is your biggest asset and the percentage of return is your biggest asset, right? So reinvest dividends, returns, whatever returns or dividends you are generating, just reinvest that amount and let returns compound. Returns on returns will make your compounding effect better and you will be able to gain. So consistent investment, make your investment consistent to gain most of the benefit of compounding. Use SIP or regular contributions in your investment journey and let the magic of compounding works for you over the year of decades. Not for few months, not for few years. You have to wait for decades to see the magic of compounding, and the amount of wealth which you will be generating over the years will be great. Stay invested long term. Avoid panic selling during market crashes. So you have to avoid panic selling during the market crashes. Choose high CAGR stock mutual funds. Focus on quality investment. So you have to be very focused while choosing an investment, right? You have to focus on a quality investment. You don't have to make an unnecessary investment in unquality mutual funds where you'll be not getting returns as expected and the compounding effect will be not as much as you are expecting, right? So what are the key takeaways? Compound interest grows money exponentially. Start investing early as possible and consistent. So compounded interest grows money consistently. We have been talking about that, right? It grows your wealth to exponential amount. We have seen an example where at the rate of 12% we are able to generate only 50 lakh rupees while investing 5,000 rupees for the year of 20 years, and at 25% CAGR we are able to generate 3.5 crore rupees. Just imagine the amount of rupees money we are able to generate. So start investing early as possible and make it consistent, right? So stock market plus reinvestment is equal to wealth creation. So this is the formula we are having. We have to look at the stock market investment and we have to make our reinvestment again and again in the stock market, which will create tremendous wealth for you. And we have seen an example of Warren Buffett, who have created tremendous wealth, and there are many more investors in India also, like Ramdev Agarwal, Manish Pobrai, Vijay Kedia, who are creating tremendous wealth for them. Patience and time are key for compound interest success. So patience, you have to be patient and you have to give the time, which will be key for compound interest success. So in summary, in conclusion, what we have, summary, if we talk about the summary, compound interest is a powerful tool for financial to achieve financial goals and build wealth over time. Start early, invest regularly, and stay invested to let compounding work on it. So for compounding interest to work, you have to, and if you want to generate wealth from the compound interest, you have to first of all start early as it possible. If you have not started investing in the stock market currently, through any modes like through SIP, through mutual fund, through direct investing in stocks, or through any of the modes, just start investing early as possible and then make that habit of investing in a regular basis so that you are getting most benefit out of it, and stay invested for a decade to generate a long-term wealth, right? So the motivational quote we have for the day: the best investment you can make is in your future. Let compounding work for you. So the best investment which I recommend is to make in your future. The more and more money and the more time you will give to the compounding, you will be seeing a significant wealth generating for you, and compounding will work for you. So that's all for today. Thanks for being here. We are just coming to the close. So thank you for being here. We have talked a lot about compounding. We have talked a lot about its magic and how the stock market and how the compounding combined will make the wealth creation for you, and you will be able to generate significant wealth. So this is the most important concept in investing. We want many of the investors wanted to know how we can start small and make our wealth grow over the years. So this is the thing, the compound interest is the thing which you can consider, and the stock market is a place where compound interest take place, the magic of compounding take place and will generate the wealth for you in a magical way, and you will be seeing the wealth for you is growing significantly over the years. So thanks for being here and joining today. Stay profitable and happy investing. I hope everyone is clear about compounding. So stay tuned for the next live session till we come in the morning.